Hello, everyone. Welcome to this week's episode on Laidback, the Tourism podcast. And our topics for this week is bridging loans explained, easy access or expensive trap. And our guest for this week is Bimpe Adegun. Bimpe is a property consultant and business coach. She offers property consultant services to first-time buyers, investors looking to expand their portfolio, and businesses seeking strategic property solutions. Hello, Bimpe. Welcome to the show.
Hi, thank you for having me. It's good
Thank,
to be here.
Thank you for honoring the invitation. I'm going to start off with the same question I ask everybody when they come on the show. Is this your first podcast?
No,
Okay.
I used to run a podcast myself
Oh, nice.
for a couple of years before I took a break. So, yes, it's
Oh,
on a
fine.
break.
Are you gonna go back to it
I think I would.
then?
Yes, yes,
That's
I think
nice.
I
I
would.
think you should. But
Thank you.
so now, moving away from your own podcast, you are a guest on another person's podcast.
Yeah,
So what are your expectations for today then?
have a chat,
Yeah,
share knowledge,
yeah.
and help one or two people that will be listening to this podcast as well.
Okay, all right. So let's get into it. For people who are new to property investing, what exactly is bridging loan, and when do you think someone actually needs one?
So, if you're new to property investment, bridging loan is a means to enable you buy a property for a short-term period. So normally you would use a mortgage
Yeah.
from a bank, a lender, but bridging loan is a short-term loan that quickly turns around and enables you buy a property without having to go on a long-term mortgage and is quickly available to you as an investor.
Okay.
That's as simple as you can put it.
That that's pretty much self-explanatory. But do you get these loans from private lenders or from banks?
So not the typical banks. So
Yeah.
they are financial institutions, but they are not your typical high street banks. So they are not banks; they're just normal financial institutions because they are governed by, financial laws and all of that as well.
Could you give us an example then?
So Lend Invest is one that is
Okay.
available,
Yeah.
and I don't know if I'm jumping now because you may be asking the question soon. But bridging loan is one that you would access through a mortgage broker. Okay, so Lend Invest would borrow you money. They are a company, so if you Google them, they are a financial institution that provide bridging loan to investors. Yeah.
Okay. So, but what kind of people actually use these bridging loans? Is it for home buyers, first-time home buyers, or is it for property developers or entrepreneurs who can actually
So there are
get this loan?
different types of bridging loan that you can get.
Yeah.
So when you say what type of people, so as a first time buyer, if you go to auction, right, you would have typically 4 to 6 weeks to turn around your completion exchange process, right? So you could access a bridging loan. Is there to bridge the gap. So if you were to go to your high street mortgage lender, to get a property, to
Yeah.
buy your property, right? It would take a couple of, they would do valuation, they take their time, really. And it could take anything from 4 weeks to 6 weeks for the offer to be given to you.
True. Yeah.
But with a bridging loan, it's quick turnaround. The interest rates are slightly higher, which is why it's quick for you to receive the loan and buy your property. So if you bought a property at auction, you definitely would need a bridging loan because the turnaround for completion with an auction is 4 to 6 weeks, 4 to 8 weeks, depending. So, in that instance, before you go for the auction, for example, I have helped people buy at auction, and what I bought at auction as well. And what I need in that instance is a bridging loan. I would not be able to use a typical mortgage lender. I mean, like your
HSBC,
banks,
right? Yeah.
HSBC, even Nationwide,
Yeah.
Halifax, any of those people, you would not easily be able to use them because they take their time.
Yeah.
However, with Lend Invest, they are looking for helping investors, helping home buyers, wherever you are. There are developmental loans, so people that are developing properties, there's some form of bridging that's available to them as well. So there are different types of bridging loans. It just depends on what you're buying, right?
Yeah.
And then the lender will be able to borrow you.
Oh, okay. That makes sense. You
Yeah.
did mention something about high rates, but I'm going to come to that. So, since bridging loans can actually be it's like a quick fix.
Yeah.
Why is it a quick fix? Why does it have this big risky reputation?
You mean the risk is that So let's take, for example, and this is me being authentic on this podcast, right?
Yeah.
In the series of properties that I have bought or helped people buy in 2022, yeah, 2022, I bought a property at auction and I got a bridging loan. So a bridging loan that you take could be for 3 months, it could be for 6 months, it could be for 1 year. So you arrange the terms of this loan.
Yeah.
And like we said at the beginning, it is short term
Yeah.
compared to a mortgage that you take out for 2 years, 5 years,
10
25
years.
years,
Yeah.
whatever it is. So I took this bridging loan for 1 year, right? And there's something that happens. You're either paying the interest upfront, so they take it out of the money they're loaning you, or you hold on to the interest and say that you will pay after the term, right? So if you don't complete your project in time, there is a potential that it is very costly, which is why it's high risk.
Yeah.
Now, the interest that you pay when you calculate it is a lot, depending on how much you have borrowed
Yeah.
compared to your typical mortgage,
Yeah.
right? And that's the reason why we could term it high risk,
Yeah.
right? Because you have to be careful. You also have to know what you're doing, or else the interest could be you could be paying 16,000 worth of interest,
Yeah.
12,000 worth of interest when you've only borrowed between 150 to 190, right? So you just really need to know what you're doing. The cost associated, there's arrangement fees, exit fees, there are different fees depending on the lender that you go with. But like I said, in 2022, I bought a property that I was going to develop, right? Now it did not take, it took me about, I bought the property about May, and in October, I had not received, I think October was when I received rather the planning permission from the council,
Oh, wow.
right? And I took it for 1 year. So now I'm supposed to pull down that building, develop it, and build again. And between May and October, I couldn't do nothing because I was waiting on the council to give me the planning permission. So for that period, my bridging loan time was going fast,
Yeah.
right? So this is me getting the permission in October and trying to quickly build. And obviously, my builders are not just sitting waiting, so they've taken all the jobs in
Yeah.
the waiting time. So if you're not careful, and eventually I couldn't complete by May, right? So it cost me a little bit
Oh,
more.
wow.
I eventually completed in July, so it was about 2 months extra.
Yeah.
But even then, I pushed as much as I could to
Yeah.
try and meet my deadline without having to pay too much in extra fees
Oh,
and
wow.
stuff. Yeah.
Yeah. So, but that links me to your experience then. So that means the bridging loan actually fits into the BRR strategy.
Yes.
So, but for those who don't understand, what actually is BRR strategy?
So that's buy, refurbish, refinance, and rent. You
Yeah.
could put the rent, you could decide not to put it because you could sell it.
Yeah.
But basically, you're buying a rundown property, you're refurbishing the property, and then you're refinancing the property.
Yeah.
So it's usually that's how you build wealth with property anyway.
Yeah.
Okay. You buy an old building. It could be commercial.
Yeah.
It could be residential.
Yeah.
And if it's commercial, you decide to you change that property from being commercial to residential, so you could convert it really. You could buy. I bought a 4 bedroom, and then we converted it to two flats of 2 bedrooms, right? In that particular
okay.
example that I gave.
Yeah.
So you could buy a residential property and convert it to something. You could buy a commercial property and convert it to something as well.
Yeah.
But you could also buy a typical rundown house, right? I went to see a 2 bedroom house that I had potential, right? And because it was rundown, I knew that I had to renovate and do a couple of things. And this is what you need to take into account with the buy, refurbish, refinance. It has to work number wise, right?
Yeah.
It has to be something that you know that when you buy it at this purchase price, it would make sense when you renovate at this amount, and the total amount put together when you're refinancing. At the point of refinancing, you've gotten a bridging loan to help you buy, secure the property, isn't it? And at the point of refinancing, you're getting a lender to value that property because you have done the works, you've added value, and that new lender has to see that you have modernized the property. and it is worth this new amount you're saying it is worth. And then they give you the money, right? The new mortgage, you pay off the bridging loan and you make extra from it, right?
Oh,
So that is buy, refurbish, refinance. And with that
strategy.
strategy,
Yeah.
you should really do it if you've got access to bridging loan
Yeah.
or if you've got cash buying,
Yeah.
so that's what buy BRR is really.
Oh, okay. That's good. That's good then. So with regards to BRR strategy,
Yeah.
right? So if one wants a bridging loan,
hmm
how fast can one actually get one, and what does the process look like?
So I would always say that there are steps in buying a property, right?
Yeah.
So for somebody that is new or somebody that has never tried bridging loan before,
Yeah.
but what you are looking at is, okay, I need a new deal as an investor, or you're looking at yourself as a potential first home buyer, right?
Yeah.
What you are thinking is, I want to buy a property that I can add value, because even as a home buyer, you can adopt the buy, refurbish, refinance strategy, right? So if you're a first time home buyer, you're thinking, oh, I want to, buy my first property.
Yeah.
What you must do first is approach a mortgage broker, right? And say that I am looking at buying a property, right? And I need lending, I need money to buy this. Now, mortgage broker will be able to tell you, depending on the property that you're looking to buy, this is go through the mortgage traditional route
Yeah.
or go through a bridging loan.
Yeah.
But let's take, for example, you were just, in your house and somebody approached you, and I could approach you and say, I've got a deal on the table. Are you interested? Now, in that moment, you're thinking, how am I going to do this? I don't have the mortgage. I don't have the cash to buy this. So immediately, before we start to put an offer in,
Yeah.
or before we go to any auction or whatever the case may be, you're firstly approaching your mortgage broker and saying, I'm going for this deal,
Yeah.
which is either an auction or somebody just told you about a property that is on Rightmove or Zoopla, and the person is saying this property has potential, right? The first person you're going to is your mortgage broker
Yeah.
to say, I need you to get me lending for this particular deal that I am going for.
Yeah.
Once they can, and it's on the same day, right? Your mortgage broker just puts in all the figures that, whatever it is, and he tells you there is this lender option one, there is this other lender option two. And then you know that you can approach the agents or the auction to start the process of saying, I want to view. After viewing, this is the offer I'd like to put in. And if it's accepted, you go back to your mortgage broker and say, okay, the offer has been accepted. Can you progress with my application with the lender? So it's as quick as that. But like I said, the first person you want to speak to
He's a
is
mortgage
your
lender.
mortgage broker immediately before you start the process of buying or,
I'm thinking about bridging loan.
yeah.
Oh, okay. So, but in the BRI strategy you mentioned, in the buy phase, all right, that means you mentioned that it's like finding a house that is on the low. Like it's like acting very fast on that deal to make sure you actually purchase the building. So,
Yeah.
how can bridging loan actually help investors to make sure that they actually move quickly to get that below the market value property?
Because bridging loan can be made available to you within 2 3 days, right? That's why it's still your best
Yeah,
as an investor
yeah.
when you find a below market deal, right? Obviously, if you decided that you have a couple of friends, 5 friends that have 30,000 each, then you don't need bridging loan. But if you don't
So you guys
have
can come
that,
together
yeah,
and
people
pull
can
together.
you can come together and buy the property, or you can get the money off them and give them interest and pay them their money back, right? So me saying basically, if you haven't got that opportunity of friends that you could speak to,
Yeah,
and then you know that your typical mortgage is going to take too long, your best option is a
it's a bridging
bridging loan.
loan. Yeah,
And guess what? It is available to you within 5 days.
yeah,
Bridging loan can be made available to you. And that's why below market value deals, you would always use a bridging loan, because you don't want that desperate seller to find somebody else. So you found that deal that you know that typically if it was on the market, it will be way more expensive than what they've advertised it for. And you want to grab that deal because you've done your numbers, your due diligence, and you know that this deal makes sense. So you don't want to lose it. Within 2, 3 days, you want to ensure that your mortgage broker has gotten you the bridging loan as quickly as possible so you can progress with the deal.
Better Help is a paid partner of this episode. Growing up in Nigeria, mental health was not discussed in our homes. As a man, you are discouraged from showing your emotions, as this is seen as a sign of weakness. If this resonates with you, you are not alone. About 62% of adults believe that societal attitudes stop them from seeking mental health support when they need one. And that's why I've teamed up with BetterHelp to stop the stigma around mental health and encourage you to seek mental health support from credentialed therapists when you need one. These credentialed therapists listen, ask questions, and help you to see things from new perspectives in order to improve your life. BetterHelp is on a mission to help you start therapy as easy as possible. If this is something you're interested in, click on the link below or go to betterhelp.com/laidback to match with a credentialed therapist in as little as a couple of days. You can also get 10% off your first month by using my link or the code laidback. Okay. But when it gets to refurbishment, that refurbishing phase of the BRR strategy, so can the bridging loan actually help you to, can it cover both the purchase and the renovation cost at the same time?
Absolutely.
Yeah.
But it all depends. So if you were, and like I said, there is the bridging loan that also gives you the renovation cost
Yeah.
as well.
Yeah.
And there's also the bridging loan where it's just the purchase you're looking at. But it would be assessed based on the deal and your personal situation. So if you're buying in a company, they will review the company and credit reports and the likes, and just to see how you're doing, how your business is doing as well. No lender, whether it's bridging loan or mortgage, wants to give somebody money that they haven't done checks on, right? So depending on you or your company, then that would determine if you get the one with the refurbishment or not. But that's still the part of the conversation
Yeah.
that you would have with your mortgage broker.
Yeah.
So take for example, you found a deal. I found a deal the other day, and I'm sure some people may laugh at me when they listen to this. I found a deal and I called it the Black House because there were a whole lot of people that went to view that property, right? Myself and my husband went to see this property, and the entire place was boarded up. The windows was boarded up. It was painted in black paints, right? So we knew it was a good deal, right? Because for the amount it was advertised as 125,000, knowing that the area, once you renovate the property and all, can go up to 190, right?
Yeah.
And if you're good, if you have good tradesmen, you could renovate that property as cheap as possible, depending on how you and your tradesmen work together.
Yeah.
So anyway, I knew that was a good deal. So, but after viewing the property, there were too many people interested in the property. So I thought, I don't want to be fighting at auction. And the problem is with auction, if you don't know how far to go, you will misbuy. You pay too much for the property. So I decided not to pursue. But I had spoken to my mortgage broker saying, can you get me a bridging loan
For
for
this.
this property? But I also knew that I couldn't get the renovation cost as well.
Yeah.
So I could only get the purchase price because of how much the property was advertised for. That's number one.
Yeah.
And number two would be how much the renovation cost would be. So sometimes if your renovation costs about 15,000, 20,000, they're thinking that as a developer you should have that money.
Yeah.
But if your renovation cost was going to be 100,000, if you're converting a commercial property to 4 flats, then most likely you get a percentage of the renovation cost, right?
Okay.
So as part of their checks, you obviously will have a deposit still with a bridging loan.
So you need a deposit to actually get
Yes.
a bridging loan.
Yeah,
Oh.
because what happens is you want to buy a property of 125,000.
Yeah.
They're not going to give you 125,000. They may give you 60% of what you require, or usually it'll be 75% or 80%. But like I said, there is that interest that is withheld. So the net amount that you get will be deducted. Interest will be deducted, and
Yeah.
it could be a 12-month interest that is, withheld, and then you get the difference.
Yeah.
Okay, so at the end of the day, it really just depends on what the deal is, which determines if you get the renovation cost alongside or you don't. So yeah.
Oh, okay. Interesting. So I didn't actually know that you needed a deposit to actually get the bridging loan.
Yeah, so it's not usually called a deposit, but if you work it out, it's still a deposit. So they want to know that you're not going to get the whole 100%, basically. You
Okay, so
wouldn't.
because I was actually that was my next question, because I wanted to ask if you could finance 100% of the purchase if the deal is strong enough. But so that means you really need to drop a deposit first.
So you're not necessarily dropping a deposit to
Yeah.
the lender, but you have some money that you're adding to the deal to purchase.
Oh, okay.
Does that make sense?
Okay, okay, that makes
Because
more
what
sense.
happens is that you need to buy 100,000 property, and then they say to you they can give you a loan of
80. Oh,
75%
okay.
or 80%,
Oh,
right?
okay. Okay.
And yes, there were times that you could get 100%
Percent.
loan,
But
but
not
things have
anymore.
changed.
Yeah.
Things have changed, and it also depends on your circumstance.
Mm.
So big developers can get the whole funds, that the lending is financed by the bridging loan, by the bridging company. So it really just depends. But and the deal, if you bought a land, you were developing, everybody is out there to make money, remember?
Of course, even
So
the lenders.
even the lenders. So if
Yeah.
the lenders see a good deal, you're developing a land to 10 flats or whatever, and they do their underwriters work, they do all of the calculations and say, you know what, this company approaching us is a big company. If it messes up and they have to liquidate, there's funds in their company to pay us. So there's a lot
Ah,
of calculation that goes into,
I see.
how they eventually authorize whatever they lend or they don't lend. It is possible, but times are changing, times are difficult. So I think that some of those good deals of 100% funding are withheld now, so it's not necessarily available. In the past, you could easily get 85% loan to value, right?
Yeah.
Where you are, so the lender would loan you 85% and you have to just bring 15%. But now you would find 75%, 70%. There is not so much 85% out there where they're willing to, lend you. But not to say that you can't get it, but like I said, it's the relationship that you have built with your lender. How much I've worked with Lend Invest now for a few deals through my mortgage broker. So I could easily say to him, can you speak to them and tell them that, you know what, at least I brought a couple of deals if it works, but sometimes not necessarily. But yeah.
Oh, interesting. So, in your own case, because you said yours actually took longer, all
Yes.
right? So, imagine if the refurbishment actually takes longer than expected. So, are there any penalties, extension on the bridging loan then?
Yes, you pay a whole lot more interest.
Oh, wow.
Yeah. So imagine you agreed an interest of 0.25%
Which is good.
for 1 year. So they would say that once that fixed period of a year elapses, it defaults to probably 2%,
Okay.
right? And they start to calculate it by the day. So
Oh,
mine was
wow.
calculated on a daily basis until I paid back the loan.
So, did the 2% keep increasing
No,
every
the
day?
percentage didn't increase,
Stayed fixed
but imagine that what I would have paid, I paid something worth of 2 months that could have been what I would have paid for
in
12
1 year.
years.
Oh, yeah.
So it's slightly more expensive. And it happens with even typical mortgages. If you had a contract with a bank for 2 years, a fixed rate for 2 years, and after the 2 years, you're meant to get a new deal, right? And move to a new lender or rearrange the mortgage with your same lender. If you don't do it in time, you would move to their variable rates, which you could have agreed a 2% now, and then it will become a 6%.
Oh, wow.
Yeah, so the
That's a lot.
penalties are there.
Yeah.
The penalties are there. Yeah,
Oh,
and
wow.
it's expensive.
It's going from 0.2. No, it's a lot.
Yeah.
But so that's a huge risk as well, because if things don't go right, that means you may be in a huge
A
financial
lot of
fix.
people have that issue.
Yeah.
Yeah.
So, but what are the biggest risks that people actually overlook when they want to take these bridging out loans?
I think that the biggest, really, in my experience, are two things: not reading the terms
Okay. That's one.
No,
Yeah.
I mean, not reading the terms. I have seen that a lot where you think that the interest has been withheld, right? And then you come to the end of your term. Okay, so I had somebody, someone was talking to me about someone that thought the interest was withheld.
Yeah.
So they agreed for a 12 months period. Now, they had finished their project in 6 months. They needed to get a new lender, right?
Yeah.
So that this new lender will be their permanent long term mortgage lender.
Mm-hmm.
Pay off the short term loan they have taken, the bridging loan, right? Quickly. But the new lender did not complete in time.
Yeah.
So they had about 6 weeks delay after the 6 weeks after the 1 year had elapsed,
Yeah.
right? Now they still thought to themselves, oh, that's still fine. At least the interest rate is withheld.
Yeah.
But when everything was calculated, then they realized no, the interest wasn't withheld. At this point now, you have to pay them the interest
Yeah.
and you pay a little bit more. So not reading the terms to understand what
What you're
exactly
what you're
what you're
going into.
signing
Yeah.
can be. And sometimes when you approach a mortgage broker, they assume you know what you're doing,
Yeah.
right?
Yeah.
So they would explain and they would use jargon terms that you probably don't understand.
Yeah.
So it's important that when you're doing this, you're doing it with somebody that has walked the path before.
Yeah.
So they can explain to you that this is the one you're signing or this is not the one you're signing. So not actually reading and understanding the terms is costly.
Okay.
The other thing with bridging loan is, with tradesmen, because it's short term, whatever project you're doing has to really be timely. So in your calculation, your due diligence and numbers, don't estimate, oh, this project will only take me 1 week. Because at the end of the day, you're relying, it's not like you're building it yourself. Even if you were building it yourself, you could fall ill,
Yeah.
right?
Something can happen.
Something can happen, so tradesmen sometimes are not the most reliable, but we must work with them,
Yeah.
right? So you must ensure that in your numbers, in your due diligence, you're giving enough contingency so that you
Yeah.
don't come to a point where your projects cannot be done in, it happened to
Yeah.
me
Traps.
where
Yeah.
you can't complete or you have to pay different tradesmen over and over again, and it works alongside the BRR strategy. So you just know that you have to give yourself time and room for errors or delays
Yeah.
so that you don't fall trap of paying excessively in interest.
Hmm. Interesting. So, with everything we've talked about so far, so good. So, what is your take now? So, do you think bridging loan is all about easy access, or do you think it's an expensive trap?
No, it's not an expensive trap. No, it's not. With property, you must always explore all types of funding. You must always explore all types of strategy. So it's like me saying, do you think that HMO, house of multiple occupancy, as a
Yeah.
strategy is a trap, is better off than a buy to let? I always say that it all depends on your goal as a person, right? As an investor, first time buyer, the first thing you want to do is ask yourself a question: what's my goal? What am I hoping to achieve from what I'm about to do? That enables and aids your decision making. It then tells you, should I really be taking a bridging loan or should I really just go for a mortgage? Because you could go for 2 years typical mortgage lending,
Yeah.
take your time with the development or whatever it is you're doing, and then you just end the contract and you pay the early repayment charge, right, to the mortgage lender. But with bridging, if you know what you're doing, based on your goal, you can achieve it.
Yeah.
So it's not a trap, right? One of the things you must always do is you must write down every of the costs associated with your bridging.
Yeah.
You must be able to add it all up with the purchase price, with the renovation,
Yeah.
then ask yourself, is it worth it?
Is it worth going through
Yeah,
everything?
because bridging can be expensive, but remember that it's a quick fix.
Yeah.
It enables you, it helps you. So if you get a deal that is smashing, and if you use bridging, you still make a huge profit, then I don't see why that's wrong, right?
Yeah.
I see it as a bonus. So you definitely want to go for it. So it's not a trap. As long as you know what you're doing, you're able to assess, is this the right move for the goal that I have set for myself? Um, yeah, it's as simple as that. Buying your first house, investment, whatever it is, just make sure you have a goal and assess if this is what is. And sometimes, and I'm just thinking here that there are times that even with the goal in frame, that's the only thing I can really access right now,
Yeah.
right? As an investor, I would have to go for it. But then you say to yourself, this is the decision I'm making. So whatever comes out of it, you're fully aware, right? Because bridging is what's available to me right now to do this deal.
Yeah.
And I'm thinking to myself, should I go for it or should I not? Right? Once you make that decision, then you just be comfortable with the decision you have made.
Mm. So it's all about being very, very smart and meticulous about it.
Yes, yes, yes. In any business, emotions should be out of the
Yeah,
out of the
emotions and not jumping into things because you see other people doing it.
yes, yes,
Because
yes, yes.
that's another
You don't copy and
yeah, copy, yeah.
yeah, you
That's the
copy,
mistake.
but copy with guidance,
That's what I'm saying.
because
Like do your own due
mentors
diligence, yeah.
would help you how far they've gone, show
Yeah.
you the way,
Yeah.
so if you can you can copy what they've done, but remember that you can't copy blindly, and that's what happens. People just say, oh, I heard there's bridging, and they run into it and they make
Yeah.
mistakes.
Yeah. Okay, but because of time, so what's your advice for someone doing their first BIR project, right?
Mm-hmm.
Do you think they should use bridging loans or do you think they should hold off until they are more experienced before they can get one?
Hmm. And now I'm just thinking of what's the best answer for this question. So this is your first BRR, and the question is, should you wait till you learn on the job,
Yeah.
right? You learn on the job. I My first project, my first property investment wasn't through bridging. It was through your typical mortgage
Mortgage, yeah.
lender.
Yeah.
But if I knew then that
What do you know
bridging was
now?
available, I would have done it, right? I would have done it. So I wouldn't say because it's your first, don't do it. I think whatever it is, you need help, you need guidance, you need support,
Yeah. Yeah.
right? And I think that if you find the right deal, right, and you have the right support, go for it.
Okay.
Okay. And you learn on the job,
Yeah.
right?
True.
My first, just make sure it's not costly.
Yeah.
My first BRL project that I used bridging for, did I make a mistake? No, I didn't. I didn't. I had support, and I'm professional now, and I'm going back to 2022 where cancel, even though I thought it would take 4 months, it took way longer. So, um, just go for it.
Yeah.
Go for it. Every venture sometimes can be a risk. It has its own risk attached to it. Just like I said, make sure you have support, guidance, help, and maybe obviously don't go for 1 million projects. Start small.
Start small.
Yeah. Use bridging to buy a 200,000 pounds
The
house.
house.
Use, understand the terms and
And then you can
everything,
scale up.
and then you can scale up. But not to say that don't try at all,
Yeah.
because then when would you ever try?
Yeah.
So that would be my advice.
That to me that's good advice. That's that's a good one.
Yeah.
So but before we'll go,
Yeah.
where can the listeners actually connect with you or learn more about your work?
So you could reach me through social media.
Okay.
On Instagram, it's simple as Bimpe Adegun. So
Okay.
just type my name, Bimpe, and Adegun, my surname, and I will pop up as the property and business coach.
Okay.
But you can find me on my website as well, which is bimpeadegun.com.
Okay.
And yes, you can reach out to me, through the website or through
Instagram.
social media. Yeah,
Okay.
Instagram. Yes, actually, I should say that I'm not. I am on TikTok, but not very active. But yeah, you
So
could still
Instagram and website is
TikTok.
much better.
Yes, yes,
Okay.
TikTok, Facebook. You find me, and you can still reach me. Yeah,
Okay.
yeah.
No problem. But thank you so much, Bimpe, for coming on to the show because that's all the time we have for today.
No problem. Thank you so much for having me.
So now that you've done your first podcast as a guest, so what do you think then?
Very, very lovely. I like the fact that I don't have to worry about going to edit.
Exactly. So are you gonna come back again?
Oh yeah, if you want me to come back, I'll happily come back.
All right.
Yes.
Thank you so much, Bimpe, and hopefully we'll have you back again.
Yes, thank you and take care.
All right.